Good morning, traders. It's 8:03 a.m. Chicago time on the 15th of November 2017. It's a Wednesday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stands today. Allocation is to safety. It looks like the S&P is gapping down this morning approximately 14 points or so. Yesterday it closed around 2578. It's currently trading at 2565. This is about 13 points. The Japanese yen stronger by 0.68. A lot of news flow overnight. Key thing to recognize is that the Japanese economy grew at 0.3% quarter over quarter in September, decelerating sharply from the previous quarter's 0.6% growth. Japan was doing very well in terms of growth, and of course, a lot of the world's liquidity comes from Japan. This is something that the market has responded to. Looking across the global markets, everything is down. The Euro stocks 50 are down 0.71%. Crude oil is down 1%. The 10-year yield is down 0.43%, so there's money pushing towards safety. DAX is down 1.15%. The FTSE is down 0.47%, and the CAC 40 is down 0.65%. So overall, the market is not liking what's going on. So there's a lot that came out, including UK jobless claims. It's the lowest in 43 years. Or the unemployment rate's the lowest since 1975. We also got a bunch of other numbers. You can look at your calendars and find those things online. There's no sense in me spending time on them during the broadcast. What I want to get into really quickly is what we saw yesterday. But before that, let's see what we're expecting in today's calendar. Today, what's remaining is business inventories at 10 Eastern. For September, expecting 0.0 prior 0.7%, and crude oil inventories come out at 10:30 Eastern this morning, expecting negative a draw of 3.2 million barrels. Distillate inventories expecting a draw of 1.8 million, and gasoline inventories expecting a draw of 1.5. And so any positive numbers on those inventories are likely to sink crude lower, even though it's already down. Crude oil, by the way, was down 2% from the open during the equity pit session yesterday. It basically opened and took a nosedive right off the open and did not recover, closed at lows. So there's definitely some weight behind that. And then this afternoon we get total net tick flows at 4 Eastern. That's right at the stock close for September. And as far as speakers, the calendar is clear. After the market, we get Cisco at 0.6 expected. Let's look at, I'm not going to look at what we expected because I didn't do a broadcast yesterday. I did post images of what I looked for. Let me see if I can pull those up. Here, 1 second. It's like a mini trader bite type of thing. Okay, here we go. All right. So this is what I expected yesterday. A dip below the prior day's low, which starts energizing a move higher, and I was looking for consolidation at the low against the point of control at 72.50, and then that would likely push us into the naked point of control at 82. That gives us about 12 points of range, and that was the key expectation, is that the market's likely to be responsive after it checks below yesterday's low. This is kind of what happened, but the market actually dipped a lot lower. There was some news on the ACA, on an ACA repeal, which was the health care law, the Obamacare law, that it would be included in the tax bill by the Senate. Market didn't like that because votes against the ACA have failed 100 times. They've come up and they've been voted against every time, and so that threatens the tax bill going through, which threatens corporate earnings, which affects us. The secondary hypothesis was one where the market has very little participation at the open, moves up to the 2580 and just holds steady until later in the close, where it starts tying into the prior day's point of control, and we start to drift up. Now notice the points of control have been moving up, right, since we gapped down last week, last Thursday. Point of control, the market's been accepting higher prices consistently and moving away from the MC point of control, and so I expected it to start dragging prices up and dragging the point of control up for yesterday to end somewhere up here again, giving us the fuel for the next leg up to 25.95. The third hypothesis is a market that attempts to go higher, tries to approach 2580, gets rejected, and then gets impulses down and pushes down towards 2565 with a run-up on the close. This is what actually happened. This is what we actually got. We had a nice opening swing, 25.74, 75 to 25.71, and sat sideways, and then the market started to sell off below the prior day's low. So prior day's low is right here, and then once it came back in, once it broke through the mid and came back in, we had a very strong impulse up, 9.75 points. That's almost a third standard deviation move, or a second standard deviation move, close to third, and it sat sideways. It was unable and unwilling to get through this 2580 area and push into the point of control. Yesterday's profile ended. The technical term is fugly. It is really flat at the top. Some short covering with minimal participation into the close. The market has just absolutely shut off as soon as we got to 25.78, which was a little earlier than I expected for buyers to be shut off, but that's what we have. Change the thickness here, and so what we ended up with is a profile that is incomplete. And the expectation with this profile is that we're very likely to get a very strong move higher in the overnight. So the overnight had a lot of energy to push up on the reopen, and it did not. It actually held the closing price and has sold off since. Very odd behavior. Into the overnight session. Here's what the overnight looks like. Right from the open, we get very little participation. I mean, there isn't a major market that's open at this time anyway, but the market is just precipitously drops down and then holds steady into the European Open. The European Open is right here, and it just trades sideways during the European session. Again, volume is very high. Relatively high. It's about 3 times what we would expect to be normal volume in the overnight session at 110. Today it's at 328, almost exactly 3 times. And so we expect some movement today. Again, the overnight session tested below yesterday's low. Yesterday's trade was a normal variation day. Up, and it looked all things were pointing towards 25.79.50 at least in the not 25.79.50, 82 actually up here. 82, this point of control. That's what we're pointing at in the overnight session, but there was just no action there. If I show you the Russell, it's in a much worse shape for buyers to participate. So we'll look at that in a second. As far as what the market has done overall, we haven't visited this chart in a while. The one-time framing up continues. Let me change the color of my pen here so you can see it. One-time framing up continues. There's the low, higher low, higher low, higher low. We still have a lower high to last week, but since we have higher lows, we have what's called one time framing up. Okay, so the overall trend is upwards and is relatively strong, and that's why I expected us to blow through and push to 2582 overnight. But again, odd behavior that we're seeing. Um, as far as the plan for today, let's look at that. Excuse me one second. All right, I'm going to get over this, whatever it is that I have at some point soon, I hope, before I die. Um, Today we're opening at the extreme of the range from yesterday. Remember, I said that if we break lower, we're likely to test this area here, and we did yesterday. We actually pushed through. Um, this morning we're opening below that. This looks relatively weak, unless there's news driving this. In my opinion, we're looking. It looks toppy, and it's likely to have a hard time pushing higher. So the primary hypothesis is likely to balance the overnight inventory, but I'm expecting resistance in the 2570 to 72 area. I'm expecting the market to hold to the resistance to hold there on a first test, and I'm expecting the market to start to push lower. We're starting to attack the weekly low here. This could change things. The weekly one-time framing up ends at or below 2563 and a quarter, and if we get below 2563 and a quarter, we might see a good quick flush into 61, and I'm looking for it to hold steady down here. So overall, looking for opportunities to sell today as far as scenario one is concerned, as far as the primary trading plan. If it doesn't do that, if it's not responsive on the open, and we continue to sell on right on the open in an open auction type of behavior, I expect us to push through and down, get into the overnight low in the 61, 62 area, and then I'm looking for an impulse up like we saw yesterday for 9.75 points. Look for a test of 71, 72, consolidate, and then continue higher into and regain some of this, some of the auction that we had, the value that we had yesterday. That is the second scenario. Okay, let's take a moment and look at what the Russell has done. Let's see. All right, so the Russell, I talked about this a lot, where I was saying that the Russell is relatively weak compared to everything else, and generally the failure starts with the smaller caps falling off, and then the other issues start falling now. So if I crunch this down a bit, let's go to 60 minutes for a second and look at how this has been playing. Let's clean this up. So if we look at the action on the 60-minute, you could see a clear pattern of the market just continuously auctioning down. So what we have is a bull flag or a flag pattern that is just sliding sideways. And what we're doing is we're taking back this strong rally. We're slowly phasing that out and coming back to what looks like the key resting area below between 1440 and 1450 in the Russell. The Russell is just not able to regain any ground. So when we bring everything back and clean this up, holy mess. Let's get rid of these and let's get rid of this. So let's go back to 15 minutes, expand, get rid of the flex levels. So when we look at just what the market is doing profile-wise, you'll see that it's just struggling to stay higher. And what we have here is a discovery day, a price discovery day, a trend day, and then from there we've been going sideways. And this sideways balance has been pretty thick. If you look at that MC profile there, you see that it's very thick down here, and it continues to lose ground. It continues to sag to the downside, with 75 being an area that it keeps testing from below, coming up, testing from above, breaking down, testing from below, and so on. And that area is likely to continue to play. But to me, again, I do expect the Russell to remain weak and to continue to push down into the 2450, 1450, and 1440 areas going forward. So this morning it's gapping below this MC, and it's likely to be responsive every time we get new territory on here. The expectation is the market is likely to retest, even though it's weak, it's likely to retest to see if there's any more selling interest, and when it finds a selling interest, then it continues to move down, and that's what I'm expecting for it this morning. So anyways, I got to run. I'm over my time. Hopefully this was useful to you as always, and just remember, it's not always going to be very readable, or legible is the correct word. But the fact is, your risk controls are what keep you in play. If you run out of money because you just blew your money on one or two trades on a highly leveraged product, the risk of loss is huge here. If you get stubborn, just let the trade go so that you have an opportunity to come back and battle another day. You cannot battle another day if your account's been drawn down to the point that it has to be closed. It's not the smart way to go. It's not the smart way to run a business, and this is a business. Good luck, and I'll catch you tomorrow. Take care.